Okay, so we're back. We now have a thorough understanding of the account tab, which is going to show us what our balance is, how we deposit capital into the exchange to trade with, and how we do a withdrawal. Now, we also spoke about the different types of altcoins and different pairs that are available for us to trade on the exchange, including our perpetual swap product, as well as our futures contracts, which, as we know, are ways to hedge or speculate on the future price of an asset. In this case, we'll be looking at Bitcoin. And lastly, we've done a very nice overview of our positions table down here, where we know that this is going to show us our open positions, our closed positions, our active orders, so our limit orders, whether that be to buy or sell, their resting orders or conditional orders in the order book. We know that they're visible here, and we can also look at where our stops are. So our stop losses, our invalidation levels, where our trade thesis has been invalidated, and where we are exiting that trade. And we can see that our fills will populate down here. So every single trade that we've had from an order standpoint that's been filled, and we have a complete overview of our order history, as we know from this section here. So you should have a good understanding of how you put capital onto the exchange, how you can withdraw it, how you can see the reflection of the transactions in the wallet balance, and understand the optionality, which allows us to trade all these different assets. Now we're going to switch over to the place order section right here, and this is where the fun starts. So here we're going to be looking at the different types of orders, limit, market, and stop. As you recall, we went over this in the slides in the first section of order types. Now we're going to show you how these actually get executed and some of the details around them and little nuances that you need to pay attention to. So let's start very simply with limit order. We can click this. Now we can hover over this question mark, and we know that a limit order is an order to buy or sell at a given price or better. As we look at our market price here, if we're going to put a limit buy, it's going to be below market price. A limit sell will appear up here as it's above the market price. So for the purposes of this lesson, let's say our quantity, so our contracts, right, dealing with the derivatives market, we want one contract and we're looking to buy it at 72.20. Now I'm putting this limit price in, which is below our market price, and it's either buy long or sell short. We're looking to buy long. It's going to show me my available balance, which we know is reflective in our account tab, and we have our order value. And we can see down here we have something called a leverage slider. And leverage is not something that we've gone over yet, but in the later sections of this course, Zoran is going to be going over an in-depth overview of what leverage is and how we can incorporate that into our trading and what it means. But for now, let's just pretend we're using 3x leverage. So we want to buy long 72.20, one contract on a limit order, press buy long, and I get a nice little summary here, confirm your order. By limit, I have one contract which matches up with this at my price here. Order value, as we can see, it matches up here. Available balance, position after execution, our liquidation price, and we want to press buy, and boom, a nice little confirmation down here. And we can see in our active orders, we have a resting order to buy one contract of XBT USD at 72.20. Not only can we see it in our active orders, but we can also see it in the order book. And we can see that we're bidding one contract here, and we can see our price. But we can also see it in this nice chart right here. And this is a TradingView integration within BitMEX. And most of the derivatives exchanges have this. We could pop that out. And now we can see a full chart, and we can see our order resting to buy right here. So you can use this chart to mark out, just like we do in our other analysis videos, where your SSR zones or your DBS zones and where you're going to put your stop loss. And as you implement the orders and execute them, they're going to populate on this chart. So let's pop this back out and let's jump back over to our place order tab. Now we have a resting order in the market at 72.20 and we can see it here. Let's skip over to our market order and let's just take a look at what this would look like and refresh our memories on what a market order is versus a limit order. Well, we have this nice little question mark. We can see it's the fastest way to get an order into the market. As we know with a market order, we are taking liquidity from the market. We're not providing it, so we would be charged a taker fee, which is more. Also, we're not guaranteed an execution price. So let's just say we want to buy one contract at market. Press buy. We have our summary tab. We can see that everything matches up and we're in. And now that's order filled immediately. Our execution price, we can see here, our order is 1, entry 7226.5. We can see there's no orders in the order book because we've been filled immediately. Our liquidation price, our unrealized P&L, because this is still an active position. And we're in at one contract in a market buy. Now, we're in a position we want to set our stop loss. So we're in at 72.2650. Let's say we want to set our stop loss at 71.50. Now, we went over stops and we understand that there's a two-part mechanism to this. And that is a trigger at which the stop is triggered, and there's also an execution. Now, this is a stop market, but there is a stop limit. Now, as we just spoke about a trigger, so we can put our stop price, our limit price is where it's going to be executed. But for now, let's just look at our stop market. So we have our contract at 1, we're long one position, we want to get stopped out or sell out of our position at one contract at 71.50. Now let's take a look at this down here. Close on trigger and this little section, mark last index. Close on trigger is going to immediately stop us out of the position. And since this is a stop market, it's going to be closing that position or triggering it exactly at the market price. Now, for us to determine what the price is, we have this little tab and we can see as we click it right here, it's allowing us mark last index. We're going to leave last and we can see last price is the last price traded on BitMEX. That's going to be the fastest execution. And we're getting out of a position, we want it to stop at market as quickly as possible. Now an index price, which we're not going to go over in great detail, but that's a separate price that's calculated by a composite index, which is using a lot of different exchange prices, and it's not quoted as frequently as the last price. And we can see the mark price is the BitMEX index price plus the basis. But for this, we want to make sure this is closed on trigger, and we set our sell stop and there, and boom, we're populated right here, and we can see that our stop loss to exit one contract at market, stop market, is 71.50. And it's stop market type untriggered because we're still in it. We're not filled, and this will populate when it fills. Now, if you recall, we talked about using stops as ways to trade a breakout. So let's say we're in a range and we're approaching that resistance level. We're using our rule of fives, and we think sellers are really going to give way and there's going to be a large impulse up. As a buyer, we want to be taking advantage of that breakout and that momentum. In this case, we would not have this close on trigger. And that's because we sometimes encounter a situation where there could be more slippage than anticipated, or price could come back against us. So these are all things to consider when looking at the different types of stop orders. I'm going to leave it at that just because it's going to come down to experience and personal preference, but the main takeaway here is when setting our stop loss, we want to make sure that that close on trigger is clicked for our stop market because we want the immediate execution at the last traded price. So that was an overview of how we execute a limit order, which is a resting order in the book. We went over how to execute a market order, which we know is an immediate order executed at market without a guaranteed execution price. And we went over our stops as a stop market or a stop limit and the importance of using close on trigger for our stop losses, and without it, looking at breakout trades and understanding the different prices that they're going to trigger at, being last, index, or mark price. I'm going to leave it at that, and I want you guys to digest the different types of order types and how we execute them and how it's implemented and what they mean and how it's reflected down here once again in our nice positions table. And in the next video, we're going to dive a bit more into this contract details section, go over funding, and briefly talk about why it's important, how it's calculated, and look forward to going over it in our liquidity theory, as it's going to be a big component of reading sentiment analysis. And again, that's something to look forward to, but let's leave it here for now and take that. And if you need to review it again, but make sure you have a good grasp on limit, market, stops, and the differences. Okay, great. Let's get back to it soon. And in the next video, we look forward to going over contract details.